Welcome everyone, welcome to another video. This one's going to be on 180 PC. Okay, this one's going to be focusing on sniper entries. So what I'm going to be doing is building on some of the other content that I've been introducing. Okay, so if you haven't watched already the two previous 180 PC ones, I would recommend doing that now before you go forward with this. So what I'm going to cover this is okay. First thing, so what is a sniper entry? So it's going to be an entry that's going to get you into a trade with a far lower risk, and hopefully what we're aiming for is to get a far more accurate entry. So we're going to have less drawdown. Okay, so again, if you haven't watched the add-in confirmations 180 PC, I would recommend going and doing that now. I'll just put a link down the bottom. Okay, so the next thing, the way to get into it. So what we're going to do is we're going to wait for the H1 candle, and I'm going to go through the examples. But we need it to close convincingly past the H4 high low. So the entry would be where you would normally be taking the entry, but we want to wait for the hour to close convincingly. Okay, so convincingly might mean with a wick, but not like right at it. So past it by a few pips. Okay, so then the rule would be like, okay, so place the limit order. It's going to be a limit order. It's not going to be a market execution, or sometimes it might be a market execution, but you have to get a feel for it first. But most times it's going to be a limit order. It's going to be placed like 2 pips above or below your entry, depending if you're longing or shorting, plus spread. Very important, plus spread. Okay, the stop loss goes 2 pips above or below the breaking candle, plus spread. And I'm gonna show you when the breaking candle has no wick, top or bottom wick, then that you're gonna have to make a slight adjustment. So take notes when I cover that part. As always, I'm fairly risk adverse by nature, so I'm going to be looking, if you're getting even close to 1-to-1, say you're getting like 80-90% of the way there, not necessarily secure profits, but you got to remove risk. Okay, so go back to my trade management video where I talk about your different options, but you need to have a plan. But you can't let a trade, once it goes to close to 1-to-1, become a losing trade. Okay, we need to protect our capital at all costs. Okay, so what I'm going to do at the end as well, once you're understanding what you're going to be looking for, I would really like you to do the 20 trade challenge. Okay, this could be a mix of back testing or forward testing, but you got to go find 20 times, 20 trades this has worked out, and then also count how many times it doesn't work out, because that's going to give you confidence. It's going to give you that pattern recognition. It's going to give you the confidence it's going to work out, and also you're training your what is it called? It's a reticular activating system. It's like what you perceive as patterns. You do train that when you're looking at the candles. You're always training that part of your brain, which is observing things. It's kind of like when you drive and you just naturally see a red light. But when you first started driving, it might have been more of a challenge. You had to actively look for these things, but now it becomes automatic. So going back and back testing you're going to be training that. It's going to become more natural. So I would really recommend back test this first, get the confidence, see how it works before forward testing it. And when you do forward test it, keep your risk low. Keep your risk low until you've got confidence in it, because it does work. Okay, it really works. And this is how I like to trade 180 PC, such that I don't even take a 180 PC on the 4-hour chart, because it just doesn't fit my personality. I really like this way. So without further ado, I'm going to get into it. So I'll just jump into the charts. Okay, so here we have Euro USD. Okay, this is not meant to replace energy. You're not meant to just take every single signal. But what I've done here is I've just picked a pair, Euro USD, and I've just gone on every single signal just to see how it works. Okay, not cherry picking. This is not meant to replace your initial analysis for what you'd like to see as a phase changer. This is just to add a particular entry. Okay, so what I've done though is I've just gone for all of January, every single, and this is why you can do backtest. I've gone through every single signal and then identified, put a vertical line on every one. Okay, so one there. Okay, one here, one here, one here, one here, one here, one here, one here. Okay, and I believe that this was 30 December. Okay, so I've just done January. Now, what I've also done is I've gone and put on like this little, you can see this little horizontal dash line. I've just gone and placed it where my normal entry would be. Okay, see how where the blue dot is? That would be normally where you place in your buy order. Okay, and then in this strategy, it's a buy stop. It's a buy stop, which means a buy stop is if you've got price, say here, and you've got your entry, you need price to go up through it to trigger your trade. What we're going to be looking at is buy limits. So the difference is a limit order. If you're buying, price is above price, okay, above your entry, and you need price to come down to your entry to replay to bounce off it. So buy stop, you got to go through and to buy, and then a buy limit is when it comes down to buy. The sell's obviously the opposite. Okay, so I've put a dashed line where my normal entry would be. Okay, so for every single one, it's covering the blue dot, and this will make more sense why I've got it there if you've watched that other video, because I'm waiting for a confirmation. Okay, I'm using my lower time frame as a confirmation that price is going to break and continue in my direction. Okay, so I've also covered it in support resistance tutorial, where notice how the candles are making higher lows, and then when we start breaking the lows, that's a sign that we could be retracing. Okay, so that's going to be that's the biggest clue, that once we started breaking the lows and not just wicking down, but actually closing below the low or the high of the previous 4-hour candle. So what I've done is just dive over to so I've done it for every single signal for January. Now I'm going to go to the 1-hour chart, which is next door. Okay, so you can see that this is automatically synced. It's synced and I've got the vertical lines. So what I'm going to do is I'm going to go back to the start of January. Okay, 5th of Jan. This is the first one. Okay. So, yeah, that's the first one. Okay. So there are pros and cons, and I'm going to cover the pros and cons at the end. Okay. But the con is sometimes you miss the trade. Okay. So what I'm really looking for, I'm looking for the candle that breaks. This one here that breaks. I really want to be filled in the next hour. Okay, not 1, 2, 3, 4, 5 hours past. I really want it to be in this next hour. So in this case, there was no trade. It just never triggered. So this one, what I would have been intending. So once this white candle, this big one, once that closed above, I would have been putting in a entry. I would be put my stop loss. So I'll be putting my stop loss like this. That would be my stop loss. And then my initial target, if I'm just going to be conservative, is just 1 to 1. Well, that's where I'm going to start taking profits or removing my stop loss. You can get far higher. You'll see the potential. Okay, but first, Notice as well, this is first one off the bank, is see how this one had no bottom wick. So the break-in candle had no bottom wick. So what I'm doing is I'm actually putting my stop loss below. I'm going back one more candle where there is a wick. So let me just remove that one. So you can see, oh, that one doesn't have a wick as well. I couldn't see that. Okay, so in this case, I've got to go back until I find a wick, because a wick's going to be my safety area. So I'm going to go back. So that would be my stop loss. And then just to make it 1 to 1, I would be looking at taking my first target would be something like that. Okay. Now, the other things is below this candle, I'm going to do my stop's going to be 2 pips plus spread. So that's where the bottom of this this red rectangle is about 2 pips plus spread. So my spread's up here for Euro USD. It's about 1.3. Okay, because there's no commission on this one, so it's sort of built into the spread. So it's going to be wider spreads than like an ECN broker. But so that's going to be where my stop loss. That's going to be my risk. Okay, so conversely is where my entry is 2 pips plus spread above. Because if you have your entry right on the line, price can tap it, but you're not triggered because you need price to come down past your spread. So I've got another video sort of explaining spreads and like why are you in drawdown when you first enter into a trade? Why hasn't it taken my profit when it hits my take profit? All those little things that's answered because of the spread. It's annoying as hell, but it's forex. We just got to deal with it. Okay, so in this case, there was no trade. To me, it's just gone too long past. Okay, so that's the flip side. That's one of the major cons. But when you do get the trades, the risk reward it makes up for it. Okay, so no trade there. Let's go forward to the next one. This is the break-in candle. No bottom wick again. In this case, what I'll be looking at, if I've got 2 with no wick, it's kind of different. It's kind of different to like these are convincing breaks, but they're kind of different to this first one. This first one, there was no wick on this bottom one, and then this was a really small candle. Whereas here, I've got 1 candle, and then this one's fairly sizable. So I would probably be putting my stop below that one because the main point of this is to keep my entry smaller. Okay, so let's just measure this. You can see on the right hand side 1.2112. So where was this? What was this? 1.23. This would probably have missed it as well. So this wouldn't have retraced because what we're looking at, most candles when they break, or most candles, look, if you count every single one of these candles, the vast majority has a top and a bottom wick. So I'm taking advantage when this candle closes, it's going to create a lower wick. Okay, so I don't want to go in at market when it closes because I know that most of the time it's going to create a lower wick, so I'm going to get a better entry. Okay, so when you do get a feel for it as well, you might want to then give it a little bit. So like maybe if it does close this far back or above your entry, maybe you want to keep your stop loss or put your entry a little bit higher. Okay, just sort of maybe you're a bit concerned that's not going to go all the way back. Okay, but you're talking a couple pips here. So sometimes it's worth risking just a little bit more to get the trade, but not too much because then you're going to be really affecting your risk reward. Just going to jump over to the 4-hour chart again. Just see these two that we've missed because it just didn't pull back. Would they have hit your take profit anyway? In this case, it would have, and this one it would have as well. So yeah, that's two trades you've missed out on because going for this entry. If these would have been 1-to-1, 1-to-1. So you're up 2-to-1. Sorry, you've made 2 trades, 2 successful trades, and then if you apply this entry, you miss them. Okay, that happens. Now let's look at, but the counter to that as well is that when you do get the trade, you can get a better risk reward, and it's also going to avoid some losses. It's going to avoid some losses, and that's really important. Okay, so let's look at this next one. This next one wouldn't have hit your take profit on here. Okay.
I didn't get that.
This one wouldn't have hit your take profit. You would have entered, would have come up, and then it would have come back down into drawdown. So you would have had to manage this trade. Shouldn't be a full loss, but it's definitely not a winning trade on this entry. On the H1, if we're looking for the sniper entry, okay, here's the break-in candle. Here's a breaking candle. So this would be your risk. That's a bit annoying. That's a third one with no bottom wick. Anyhow, that would be your entry. You'd be getting filled on this next candle, which has made that little lower wick. Back to your entry. Okay. Now, you've taken, so your target is, oh gosh, 1 to 1. Okay. Target is 1 to 1. So this didn't get there. You need to make a point that if it goes up and then sort of comes back, once you're in it for that long, you really do want it to trigger and go. So you've had time to remove your risk. Okay. So this one could be a break even, or you might have even, if like part of your rules, you might be taking some profits when it's getting closer to your 1 to 1. Okay. In this case, it would really matter where you've put that stop loss. You might feel that you don't need to put it below this candle. Okay, so this is measure. So this one, so it's 30 pips where it currently is. Yeah, like it does work out a lot when it's below this when you do have a wick. Okay, but it will be a feel for it as well. So let's just move on. Because I haven't cherry picked any of these. Now let's go to the next one. Okay, so we'll be looking for a buy. This one would be, this one is here. Okay, this one here, clearly a loss. Probably no chance to have managed it. You might have moved it up, trailed your stop below this candle, but clearly a loss, never really gave you any sort of chance. Now, it never closed above your entry, so there's never been a trade. So you would avoid any sort of loss. You've saved yourself a loss. Okay, let's go to the next one. Okay, so this is the sell. It tested it first and then closed above, so no entry. Then it's closed below. Okay, closed below with a little wick. So this would be, you'd be putting in, okay, because it's got a top wick, that would be your entry. Then we'll do 1 to 1. Okay, so you're getting pretty close, By the time you've moved to break even at this stage, or you've secured some profits, you might close like, say, I don't know, 50%, and then bring your stop loss down. A little tip as well: if you bring it to your entry, you've got a good chance of getting stopped out because price will come back. If you leave it slightly above the candle, you'll survive this initial pullback a lot of the times. Because then, if you can survive this initial pullback, then you get to reap all the rewards. Okay, you can start trailing behind the swings, or you got options in. But bringing your stop loss to break even, whenever I say bring to break even, yeah, you might not be exactly your entry, just above the candle. So take a tiny loss. Take a tiny loss, because more times than not, you're not gonna get stopped out. Okay, let's go forward. Let's go next one. This one was, what was this one? This one, 8. Where are we up to? We're up to 12. Okay, so we're here. This one was clearly a loss. Now we're looking at this one. Okay, so here's your entry. Stop loss goes above the breaking candle. And then you go for your 1 to 1. You're not stopped out, and that's the main thing. You're not stopped out when this retraces, because you're protected by this wick. So, but once you've had, like, this is just ranging, and then you've got 1, 2, 3 hours where it just hasn't gone. So this is where you could be like, when it comes back to your entry, you could be closing out, put break even, small loss, up to you. Let's move forward. Okay. Next one, 13 Jan, 13 Jan, so that's this one here, okay? So nice entry. So on this one, you know, if you did trail your stop, then you could get more than a 1-to-1 either way. Well, this one, so we've got your entry goes around here. Then once it starts moving, this one moves quickly. This is what I want to see. So when you start ranging a bit, this is where I'm starting to I'd be looking to get out and reduce my risk because it's closing against the way I want it to look. This one's perfect. Okay, nice entry. Let's go next one, speed this up. Okay, so what we're looking here, 19 Jan. So I think we're looking for cells. Yeah, so sell and a sell. So there would have been no entry. So you would have had 2 losses on the other one. This one never closed below, so that's a non-entry. Same here, never closed below, non-entry. So you've saved yourself 2 losses. Okay, next one. This is 27 Jan. Okay, so this one would have been a loss, taking it as normal entry. Okay, because stop loss way up here, entry there. With a tighter entry, okay, you've got it, would be like this. Okay, you're giving it a little bit of room. Price definitely does pull back. Pulls back is not what we want to see. We want to see it continue, but we keep on making lower highs. So there's a chance to get out with this one on break even. Let's go next one. Okay, so what are we looking at? We're looking for sells again. This one breaks. Now this one, you can see this one pulls back. This one's close. So if we're going 2 pips plus spread, we need to measure what this distance is. Okay, so you can see it's 1.7 pips. See on the right hand side where price range 1.7 pips. So in this case, you would have got triggered. So your entry would have hit you exactly to the pip. Okay, stop loss goes above this guy. Okay, because it's got the wick on it. This one, you know, quite comfortably get your 1-to-1. You can get like a 2-to-1, a 3-to-1, you know, quite easily because that's your opposing level of support. Okay, that's your opposing level of support. Could you have done this? Could you have done this on the traditional entry? So we'll go to the 28th. So that was here. Okay, so it never got to your target. Going the normal entry. But this one you could have pulled a 3-to-1. So really, really effective. Okay, so is there another one? No, none. Okay, so more examples. It happened quite nicely on Aussie US. Okay, let's say look at these. We've got where's some entries? Okay, here we'll just look at these 3. We'll look at these. We'll go back. We'll do it again. I'll be quicker though. Okay, so let's just go trend line. Okay, so that would be your entry. Let's clone that, bring it here. Bring it to there. All right, the stage is set. Let's just go back from here. Okay, we've got we've got 1 losing trade, 2 losing trades, 1 winning trade. Oh, I missed one. Okay, this one, I don't think spread would have let you hit your take profit. So this would be a break even. So we've got 2 losing trades, 1 winning trade, 1 break even. Why didn't that stay? Okay. This one here would have been a winning trade. This one here, not a winning trade. This one here is still in play. Okay, so we've got like sort of break even. You've got a couple losses, a couple wins, break even. On the 1 hour, let's go back to the start. Okay, let's see what would have happened. Okay, so this is the first one. Never would have been entering the trade, so we've avoided the loss here. Another one here, you never would have entered the trade, so we've avoided the loss here. Because it's only valid for the next candle, okay? It's only valid for this candle, this candle, this candle, this candle. One of those 4 has to close above, and then the entry has to be the next one. Okay, so let's go. So you've avoided those 2 losses, so that's good. Now this one you don't get that, they never pulls back, so you never get that entry. This one here, okay, so here, this one I think was I think it was the break even one. We've got that would be your entry, then your target, at least 1-to-1. So this time you've managed to get a 1-to-1, potentially a 2-to-1 if you're going for more. Okay, or if you move your stop to break even or like slightly above the candle. Notice how we're making lower highs. So keeping your stop above the candle you're gonna survive that pullback. Okay, so then price moves on. So you got that trade. Next one. Here's the candle that breaks. So give a stop above here. This is an incredibly tight stop, which is this is the kind of risk reward you can get then. Like, it's quite easy for you to get your 1-to-1. Where's your opposing level? Like, there's the sort of next level of structure. So what are we looking at here now? You're looking at like a 3-to-1 at least. So this is going to pay for the trades that you miss. It's going to pay. You're avoiding taking losing trades, and then the ones that you do catch, you get a far superior risk reward. Okay, let's go next one. This one here, now this is just not convincing. Okay, that's not a convincing close below. Neither is this one. This one's a little bit more because you've got more of a lower wick. You would have had to have entered basically at market, but you're getting close. See, I think this was a Friday. I was doing a video on this one. So you're not actually, this is probably a no trade. Okay, so let's just remove this one so this line doesn't get cluttered. Okay, now we've got today's one. Okay, let me just remove this stuff here. Okay, so you're keeping so today's one's still in play. You wouldn't have hit your take profit yet. But if this is the break-in candle, so this is your stop loss. Then your 1-to-1. Okay, so we're still not even in this one, you still haven't quite got there. But you can see the power in it. Okay, so do go back test it. It works incredibly well, especially when you're not filtering. There's been I haven't filtered any, so some of those trades might not want to take it anyway, but you get the point. Okay, so I do recommend go find 20 of these trades. Okay, because it's gonna make your life a lot easier when you start having trades that you can, it's not just 1-to-1. It's not, you're not having to have these trades going for such a long time. You can know the results a lot quicker. Okay, so what I wanted to cover though is just cover the pros and the cons. Okay, so the pros, of course, far superior risk reward potential. When the ones that you do catch, higher accuracy. Okay, so you're not going to have as many losing trades. It's going to be easier to hit your take profit and remove risk. So it's more hands-on. Okay, you're going to have less losses, and that's the main one. Okay, everyone's a good trader until you have some losses. It's a faster time frame, so you don't need to hold trades as long. So sometimes, you know, it can be just tough holding 4-hour trades because it just goes for a long time. The cons is also because it's a faster time frame. So you're gonna have to, if you're used to slow strategies, things are gonna move quicker. Okay, some trades just won't give that pullback, which is annoying. Now, you need to be prepared at the close of the hour candles. Okay, so one thing you can do, you're gonna set alerts or like a timer on your phone. Okay, if this trade is I get a signal at 2 o'clock, I need to check at 3 o'clock, 4 o'clock, 5 o'clock, that kind of thing. It's going to make it difficult to do this on higher spread pairs, but trading in general is difficult on higher spread pairs. So do stick to your lower spread ones. Okay, so I think I might just leave that at there. I was quite excited to get this one out because it's just got so much potential. But yeah, I'll just leave it there because we've been going for 31 minutes. So you know the drill. If you like this video, subscribe, like it, drop a comment. If you've got any more questions, let me know, and I'll take it from there. Okay, thanks for your time, thanks for watching, and I'll see you again.